Are you still drowning in a sea of chaotic spreadsheets and manual data entry while also trying to scale your consultancy agency? Most solo consultants lose hours to administrative overwhelm, and without guidance, QuickBooks will suck hundreds of hours from time you could be using to help your clients. Today, I'm going to show you a simple and easy approach to using QuickBooks so that you can stay on top of your financial records without wasting more time. And I'm not going to just share my screen and tell you what everything does. Instead, together, we're going to set up a set of fictional books for a marketing consulting agency called Sure, Jan.
He's really good looking, and he thinks I'm super cool.
Sure, Jan.
Why do anything if you can't make it fun? So we'll cover some important features to QuickBooks that are unique to consultants, such as putting together a chart of accounts, setting up products and invoices, using the projects features, as well as how to pass on billable fees to your clients, and so much more. By the way, if this is the first time we're meeting, my name is Andrew Bloom. I run Profit Logic, a small bookkeeping firm that helps service businesses across the United States with catch-up and ongoing bookkeeping. I'm also a Ph.D. student in business with a concentration in accounting. So it's safe to say I'm a complete nerd when it comes to all things bookkeeping, accounting, and software. So be sure to like this video and subscribe to this YouTube channel for more tutorials and courses on QuickBooks, Wave, bookkeeping for your small business, and everything you need to stay on top of your financial record keeping. All right, it's time to get started. Let's hop on the desktop and dive into QuickBooks.
Okay, so before we actually dive inside of the QuickBooks file for SureJan Marketing, I wanted to quickly show you which subscription we'll be using in this example and tell you why I decided to use this certain subscription. QuickBooks has a lot of different subscription options. For most small businesses, let's say you got just a couple employees or you're pretty much a solopreneur, then you're going to stick to the small business options. And the two main options they will suggest are Simple Start and Plus. Now, for this video, we're going to go over how to use the QuickBooks Online Plus subscription because of one feature in particular. And if you scroll down, you'll see there's big difference in price here. The usual rate after your first 3 months of a discount at this time, July of 2026, it's usually $38 a month for the Simple Start versus Plus, which is $115 a month. So QuickBooks isn't exactly cheap. So I'm a stickler about not making my clients have to pay for anything that they don't need. And Plus is quite a jump from Simple Start. The feature that I find particularly useful for consulting businesses is that you can track your projects in QuickBooks. I only suggest that having this feature available if you plan on using QuickBooks for most of your financial tracking. So if you're going to be using QuickBooks Invoices to receive money from your clients and you want to be able to offer billable expenses and kind of keep track of a variety of expenses that fall outside of just billable fees, and you want to get an idea, for example, if you have contractors who also work on client projects and you want to get that rich financial data about how much you net on a client, this added feature will help you immensely. And I'll show you later on what this looks like in real time, whether having a project tracking feature is worth the extra money. However, if you plan on using other tools to track your projects outside of QuickBooks, such as using a spreadsheet or other software, and you just want QuickBooks to be general business bookkeeping, then you can stick with the Simple Start option instead. And beyond the project tracking, there are some other additional AI features and bonus features that you can see a list of here. So I do recommend comparing the two, but for this particular video, we're going to use the QuickBooks Plus subscription. Okay, so I was hoping to go through the full setup process with you, but because I'm using an email that I already have a QuickBooks account set up for, I didn't quite get the full onboarding experience that you might go through the first time you set up QuickBooks. All I can really say is that it's a very self-explanatory process. The one thing I do suggest doing during that process is to make sure you are very clear about your business type. So they'll ask what your industry is. Make sure you make it as close to consulting as possible, not necessarily any kind of niche you serve, but the actual consulting part of the business, because QuickBooks is going to try to set up your chart of accounts as close to the kinds of accounts and categories that would make sense for that industry. But don't worry, we'll go over setting up the chart of accounts later on in this video. So for now, when you first get onto QuickBooks, this is basically what your dashboard is going to look like. And if you are already overwhelmed by QuickBooks, I'm going to tell you right now, there is a cheaper option than QuickBooks, and it's called Wave. I do recommend a lot of my clients who especially are neurodivergent or find all this really busy or find QuickBooks in general very overwhelming, go check out one of my other videos on how to use Wave. It's a much simpler software, but it does not have the level of features and tools as QuickBooks has. So be sure to weigh that trade-off in your options. All right, so here we are. This is what the platform's going to look like when you open it up. We've got a bunch of buttons on top, at the nav bar on top. We've got this nav bar on top where you're going to find this gear icon. This is going to be your settings button. This is where one place you'll tap into to access things like your company settings, managing users, managing your subscriptions and billing, accessing an audit log. So don't forget, the gear icon will usually be one of the best places you could tap into if you want to do some admin work inside of your QuickBooks account. And if you need help with anything you see here and don't want to do it yourself, I'd be more than happy to take you on as one of my clients. You can head on over to the Profit Logic homepage. There you could fill out a form, let me know a little bit about your business and what help you might need, and set up a time to talk with me, and I could tell you how I might be able to help you with your bookkeeping. On the left here, there's a nav bar that's going to take you to all the different pages within QuickBooks that will help you with your bookkeeping, reporting, and receiving and sending out money. We'll go over all these soon. But as you can see in the middle, we have the dashboard. And at the top here, we have a bunch of buttons. Each of these are different pages. They're different, what QuickBooks like to call apps. They're the same apps you find here. So accounting, that's the same accounting button you'll see there. And you'll also see a business feed. They'll post things like insights, reminders in the business feed, although I personally don't use it much. You can also include quick actions here, such as creating an invoice, creating a check. More importantly, I think the best features of the dashboard are your at-a-glance numbers. So as it is set right now, you would be able to see a profit and loss for a certain amount of time. And same thing with paid and unpaid invoices. The cool thing about the dashboard in QuickBooks is that you can customize it. So you can completely remove these buttons if you find them unhelpful. You can get rid of the business feed. You can include additional widgets, such as the balance of your accounts payable, receivable, a list of current expenses, your sales, and so many others. So we included, so we'll save that. We'll add the buttons back. So when you save that, oh, and you can also move these around, the apps down here, the widgets down here. You can bring your expenses up, your sales up, leave the bank accounts down, and bada bing, bada boom, you have a customized dashboard. Something important to note about this dashboard is it's only going to pull information from transactions that are posted. If you don't know what that means, don't worry about it right now. We'll go over it when we talk about in the bank feed. But if you ever open this and the numbers look off or should be different, it's because there are transactions that need to be reviewed first before they're included in the books. Okay, so that's the dashboard. Over here on the left is the nav bar that you're going to use the most. This here is the create button. Pretty much almost anything you need to do in QuickBooks can be found through the create button. Especially if you're adding in manually an expense, you need to create a journal entry for a transaction. You want to create an invoice or an estimate. You want to add a vendor or a customer. Most of what you need you'll find by clicking the create button. Another tab that I really love is the bookmarks part. So this button here will list bookmarks. You can include any of the major pages that you want. So in order to add a bookmark, you can click the pencil icon here. And if you know what you're looking for, you can search for it, such as reconciling and the bank transactions. You can add it that way, but you can also just go to a page. For example, we're going to be using projects later. We'll include the projects page by clicking the bookmark button of the page we want to include in our bookmarks, and we can see it's now been added. Some bookmarks I always recommend to have at least are Reconcile, bank transactions. I like to include invoices as well, especially doing invoicing through QuickBooks as your major form of receiving payment. So these three buttons, the settings gear icon, the create button, and the bookmarks button, are pretty much how I access nearly everything I need to do in QuickBooks. The other major tool on this page is the search engine. So you can look up anything in QuickBooks. If you know there's a transaction that is $500, you can look it up in the search bar, and it's going to try to find all the transactions in your books that are $500. Or if you want to look up a vendor, the search bar is the easiest way to find anything quickly. So gear icon, search bar, create button, bookmarks tab. These are going to be the best tools for navigating QuickBooks speedily. All right, so next we got a home button here to bring you back to your dashboard. There's a feed button here that is part of the business AI feed. I have not done any deep research into this. I don't find it particularly helpful at all. But if you were optimizing your books for the AI features, I'm sure this would be a really great resource. Next, there's the reports button. This is also a really important page that I would bookmark, at least the standard reports. This is where you're going to find reports for your profit and loss statement that you should be checking monthly, your balance sheet that's going to show you everything that your business owns and owes, and any outstanding invoices. But we'll go more deeply into reports later. Next, you have the All Apps button, and here you can see all of the pages that are in QuickBooks. So we got under accounting, this is the button to bank transactions. Automate the connection between your bank and QuickBooks. It's going to pull in transactions automatically to be reviewed. We'll go over this later. It's another one you should definitely have bookmarked. There's a page for integration transactions. So if you're planning on using things like Square or Wix to sell digital products, this is how you're going to want to integrate them so that the transactions are mapped appropriately to QuickBooks. Also in accounting, you have receipts where you can upload receipts to create transactions or map them to transactions in QuickBooks to store everything in QuickBooks. You also have the reconciliation page, which we'll go over more deeply later on how to perform a reconciliation, why it's really important. You'll also find a rules page where you can set up rules for how to categorize transactions. And then next, you'll have your chart of accounts. We're going to go over this and how it's important to your business. We'll go over this in more detail in a bit. You can also set up recurring transactions, or at least see a list of your recurring transactions. You can find information about your accountant or invite your accountant on the accountant page. And next, under expenses, you're going to see everything regarding your outgoing transactions. And this would be the best way to see a list of your expenses, since not all of them may come through a bank feed. To speed this up a bit, you got vendors, your list of vendors. This the page where you can pay bills and manage bill payments. This is going to help you better track your accounts payable if you want to use this feature. You can also track mileage and create a list of contractors with their information, as well as prepare 1099s for your contractors. We'll cover this later. We'll cover this later on when we talk about vendors. Next, under sales and get paid, you'll see a list of all your sales and some data around sales over time. You can see your sales transactions and invoices. This is where you'll create and send invoices and recurring invoices. You can also set up payment leaks in QuickBooks, but you do, as with sending out invoices that can get paid digitally, you're going to have to set up a QuickBooks payments account for that. What else is important for now? If you want to track your payments from QuickBooks, this is where you'd find it. Moving forward, they now have a customer hub that can show you the number of open estimates, contracts, clients going through projects, with clients with unpaid invoices. So this is a good place to find some information about your clients. We're gonna speed things up a bit. This is where you will set up payroll if you want to set up payroll, and this is where you'd access anything involving payroll. You can also set up information about your team, even if you're not using QuickBooks payroll services. For instance, if you're using something like Gusto, then this is where you can also keep information about your employees in QuickBooks. QuickBooks Time, if you want to use that service, that's here. You can set up time entries if you're tracking how much time you spend on different client projects. This would be one way to do so, and also connect it back to your income and expenses. Next, this is the projects page. We're going to go into this more deeply later on, but this is where you'll access all your projects. We're going to skip inventory, although this is where you would set up inventory if you have it. Next, there's sales tax. Personally, I live in the state of Oregon where we don't have sales tax, so you're going to need to set up sales tax for your state. And turning on sales tax can be a good idea, and being reminded on what your tax liability is to your state, and when and how often you should be paying your state, and receive reminders for when to do so. Business tax is a new feature they have, where they're going to give you some information about what you possibly might owe in your taxes. Just so you can get a good idea, especially if you're paying quarterly taxes, what that might all look like. And lastly, in lending, there are some partner opportunities available for accessing cash. So those were the major apps. I'm basically showing you what's in QuickBooks. Under that, you can pin certain apps, such as here we have an accounting app pinned. And you can customize this nav bar, this area of pinned apps on the left there, by removing or adding as you see fit. And you can even swap them around. See now expenses is there. And that's just another nice way to have customizability in QuickBooks. Okay, so that was a quick overview of the dashboard. Oh, and I guess we decided to have a setup page. Thanks, QuickBooks. All right. What a great transition. Okay, so let's set up the books for SureJan marketing. Let's get started. So for starters, what is the business called? This business is called SureJan Marketing. We're going to say, what were you using before QuickBooks? Something else. We're not new. We are not going to enter the website. We'll skip and enter manually. Now, here's the most important part of setting up that I mentioned earlier. You'll want to include the right kind of industry in order to get a ready-to-use chart of accounts that will most likely fit your business. So the industry is consulting, and it just so happens there's a marketing consulting services option, which is what we're going to use for this business. And it seems there's other kinds of consulting services too. So if you're consulting for B2B and other ways, you can see some options here that might work regarding management consulting, admin management. You're going to want to try to find an industry as close to consulting as possible. We lucked out in that there's already a marketing consulting services industry option, so we'll click that one. Another important setting that we'll want to put in accurately from the start is the business tax type. This is also going to affect your chart of accounts and how your QuickBooks is set up. So in this case, we're going to say we're an LLC, but it's a single owner LLC. And LLCs that are owned by only one owner are treated tax-wise as sole proprietors. If there were two members in an LLC or more, then you'd have a partnership. It's going to automatically be taxed as a partnership. And if you know, if you opt to be an S corp, even though you're an LLC, this is the selection you'd want to pick as well. S corp is what you're going to pick, even though you're still an LLC. But since we're just going to be a sole proprietor, single owner LLC, we'll click that. And then they're asking for annual revenue last year. We're going to say it's less than $1 million. All right, now let's talk about the role in the business. So I, who am setting this up, I'm going to pretend that I'm the owner. How many employees do we have? We're going to say for now, just the owner. We will be using contractors, but a contractor is not an employee. So make sure you know the difference. Contractors will receive 1099s. They pay their own self-employment taxes. Employees are hired by the business, and the owner, pay payroll taxes for those employees. So that's the quick difference between contractor and employee. Because SureJan only has contractors, we'll say how many employees, just the owner. All right, now they're wanting to help us set up things like the invoice and linking bank accounts, and they're forcing us to pick one. So we'll start with invoices, and we're going to skip setting up payments, although if you're planning on sending out invoices and receiving payments through QuickBooks as your main way of receiving income, I highly, highly suggest setting up payments. It'll make your life easier, even though they will take out a little bit of a fee for each invoice. That's a percentage, but something you can bill to your clients if you want, or just eat the cost because it is a worthwhile service if you're using QuickBooks. So we're going to skip that for now. Same thing with accepting in-person payments. We're just going to skip for now. We're not going to automatically connect accounts. We're going to upload them manually because this is a fictional business. But I'll show you a little bit of what linking accounts would look like. This is the whole reason you're using QuickBooks, is to make this as automatic as possible. If you plan on doing things manually, I suggest using Wave instead, or just a spreadsheet, because this is how you're going to get your bookkeeping done really fast with automatically importing the bank transactions. So this is where you would add all of your bank accounts. I think they use Plaid, but we're going to X out of it for now. Here they're suggesting download the app so you can snap receipts on the go. We'll skip that for now. And now it's asking us what we want to do in QuickBooks. So they're going to try to be helpful in providing tutorials and information depending on what we choose. For now, we're just going to skip this. All right, so now it should be setting up the platform. Let's see how this goes. All right, so as one of my clients likes to say, this is such a busy platform. So beware of all the ads and pop-ups. So now that we've got the accounts out of the box, let's go over a couple of settings that are going to be important for using our QuickBooks account. So coming over to the gear icon, you'll see the options for settings. Let's go over to your company account and settings. You're going to find your company info from the start. Oh, we got to add a logo. I made something just for this. You really got to commit to the bit. All right. Hey, there we go. Jan Marketing. If you can't see it, we gotta. Can't forget to add the logo. Okay, so we added the logo. Under usage, you're going to see the number of chart accounts that you can add additionally. I've never seen anyone hit this max. It'd be impressive if you do, and you're probably doing your bookkeeping wrong if you do, but don't worry about usage limits. For billable users, this should just be non-accountant, non-bookkeeper users. You are allowed to include an accountant that I think is not part of your billable users. So if you have a couple people who need to get into the books, do invoicing, pay bills, answer questions, then that's how you'll include users. Next, under reports, we got nothing. No. So under payments, this is where you're going to edit any of your payments, QuickBooks payments settings. One thing you're really going to want to make sure you set up correctly is how you map the payments in your chart of accounts. So when QuickBooks sends the deposits, it's going to want to map to somewhere. It should map to the bank you set up your payments to deposit in. And if you need to change it, make sure it's changed here in the settings as well. And you'll want to include a processing fees account. This is where you're going to record any of the processing fees. If you can create an account specifically for QuickBooks fees. Otherwise, I suggest just adding it to bank and credit card fees expenses or merchant account fees. Let's see, there is no merchant account fees. So we'll just stick to bank and credit card fees expenses and save that there. All right, another important page is accounting, and it's not loading. Never mind. All right, another important page is sales. For settings, this is going to be your sales form. You'll have your preferred invoice term. This is going to be the automatic one anytime you make a new invoice. I like to stick to due on receipt. You can also turn on including discounts or deposits as potential options on your invoices. You could also do things like accept tips or a service date. So we'll go ahead and save that. You'll find some invoice payments settings here, whether you want to accept any payment through the emailed invoice. But if you have a different way of collecting income, then I'd recommend turning that off. Otherwise, this is a really handy feature. You can also provide financing. So let's say you're a consultant and you get paid upfront the whole project fee, then you can turn on the option to have customer financing. And I think they use a third-party software. I think it's Klarna in order to provide that. Next, under products and services, you'll want to include products and services on sales form, especially if you have a variety of things that you sell. Maybe it's not just one kind of consulting, but different packages. You'll definitely want to keep this on. You can choose to not include quantity and price rate if you're just doing services. If you're just doing boutique customized services and you don't have a routine way of pricing things, then you could turn that off. You don't need to track inventory and quantity on hand, so you could turn that off. Otherwise, this is just inventory tracking if you want to use it for a product. So we'll save that. Next are late fees. I highly recommend using late fees just from one business owner to another. When you're dependent on invoices as part of your method of generating sales, then I highly recommend having some boundaries around when you get paid. So QuickBooks can set this up for you and automatically include a late fee for any outstanding invoices that go beyond a certain date. So you can include a flat $50 fee or a percentage of the balance, and you can do it at a different frequency. Once per invoice is fine for me. You can include a grace period. I like to use 7 days. And it'll come up as a late fee on invoice, but you could call it something else if you wish. So we'll save that. All right, next we got progress invoicing. This is where you can create multiple invoices from one major estimate. So if you're doing a really big client project and you start with an estimate, but it might change. For instance, in this case with marketing, if the business is paying for the ads, we'll include that as part of the final fee for the consulting. Then the project may start as an estimate and change. The actual invoice might change as the project goes. So you could turn that on if you would like. Here under messages, you can edit what your default messages look like, such as with sending out invoice. Making this unique can help with a brand presence. Otherwise, this is a pretty decent standard message. After that, there's reminders. Definitely send automatic invoice reminders. I think it is so beneficial after usually the 3rd, 7th, and 14 days. So make sure these are turned on if you want to use them. This setting, there's a new AI feature in QuickBooks that can suggest possible customers and estimates for what those customers' services could be, that they'll send you reminders daily in an email. I highly recommend turning this off unless you want to use that feature. Otherwise, I find it annoying. All right, moving forward. Next, we have settings for the post invoice or feedback survey. If you want them to provide some follow-up information right after paying an invoice, such as a work request or asking for a review or feedback, you can set these up and receive information about the work you did. So there's some options here you can explore if you would like to use that as part of your invoicing. Next, under online delivery, you could choose whether how much details are in the email, whether for invoices or credit memos and such. Change that there. Lastly, under statements, you can show aging transactions as a bottom line on the statements. All right, that's it for sales. Under expenses settings, we're definitely going to want to make some edits here. So for bills and expenses, you can include items that you sell on expense and purchase forms. We're not doing inventory. We're not going to touch that. We're going to keep tags on. We're going to track expenses and items by customer. But the most important feature we want to change here is making expenses and items billable. And if you want to charge sales tax for these items too, you'll want to make sure that's turned on. As when we set up a project for using advertising credits, we're going to want to be able to bill that expense to a client. So we'll keep that on. We're not going to use purchase orders. That's usually an internal thing when you're buying supplies within a company. So we'll save these settings. Here are some settings for time. So what day of the week you want the beginning of the week to be. And then for the timesheet, here's some settings on using time we're not going to cover. Lastly, under advance, you're going to want to know your accounting method. For most businesses, it's going to be accrual. That means that you want to track your finances in the realistic period that they're actually being applied. So if you receive an invoice and payment for an invoice today, but you don't do work for the project until a month later, then you're going to want that income to show up on next month's profit statement, not this one. So that's what accrual is. We want to keep the expenses and income according to when the actions occur. Versus the other option, which is cash, meaning that you record expenses and income exactly when the money is received. So let's say I do work right now for a client, but I don't get paid until next month. Then with cash method, I would record the income next month, even though the work was already done now. Accrual is thought to be more indicative of actual business performance tied to the things you do, while cash is a really convenient way of accounting, particularly for like construction businesses where there's a lot of moving parts and a lot of money moving very quickly, where you're doing project tracking on the side. So for most of you watching, you're probably going to be accrual. Here you can also change your customer label, whether it be customers. We're going to change it to clients, but you have other options as well. Here you can change your marketing preferences, as well as any other important information about your accounting, such as when your fiscal year starts, the beginning of your tax year. Close the books. So close the books is one setting we're not going to set up right now, but you need to know about. When you do your books and you pay your taxes and everything's codified, it's done. You're not going to make any more changes for the year. This is when you turn on close the books, and you can pick the last date the books were done, and then anything prior to that, you'll either receive a warning when trying to make changes, or receive a warning and have to enter a password. So this prevents other people or yourself from making changes that could affect books that have already been used for your taxes. But usually the timeline for doing this is to do it on an annual basis. So after filing taxes, for instance, once the books have been reviewed, that's when you usually want to close the books. So just keep that in mind for the future. But for now, we're just going to save this. Next, you have settings for chart of accounts. Here you could change things like enabling account numbers. I personally don't use them, but that is a mix of personal choice, but can also have benefits for finding accounts easily. You can include a discounts given account or choose a different account to represent discounts given. You can include a tips account, and you can include a billable expense income account or assign billable expenses to a different account, such as part of your sales. Lastly, you can choose to track classes and locations. If you have multiple offices, using locations can be useful. Classes can be useful, mostly with folks who are in construction and real estate, where you're trying to track projects a certain way. That's one method of tracking projects, where you can just generate a report for it. But I seem to find the projects app more beneficial way of tracking for projects than just doing classes. Next, under automation, you can choose to have your forms automatically filled with whatever the last form was. This can be useful where you have a lot of transactions you need to adjust. They're all within the same date. You might not have to change the date as much or change the customer or the item, but you always have to just check and see what you always have to double check your work when you use pre-fill forms to make sure you're not just accidentally entering a form that already seems like it's complete when really it needs to be edited. You can also automatically apply credits for customers or bill payments. So if you don't want these things to happen automatically, just turn them off. I have a client who does not like pre-filled forms. So again, just user's choice. We do want to make sure projects is turned on since we'll be using it. And lastly, currency. You could change your home currency, choose whether you want to use multi-currency. You can also choose to be part of the business network. This is whether you want to be showing up as a vendor for other QuickBooks users. I personally don't really use the network, so you could choose whether you want to keep that on or not. Other preferences include things like the date format, the currency format, client label again. This one's good. Warn me if duplicate check number is used. That's turned on. Warn me if I enter a bill number that's already been used for that vendor. Same thing with journal number. These are useful notifications so that your books don't create duplicates. All right. Lastly, you have wallet. This is where you can see when your accounts are connected, what that connection looks like, and any cards on file. Okay, so that was settings. Okay, now that we've talked about settings, let's go into the chart of accounts and talk about how to set up the chart of accounts. But before we even start setting up the chart of accounts, which you can get through the accounting app, which is down here. I think you can also get to chart of accounts up here by clicking on the gear icon under your company and selecting chart of accounts. So before we can set this up, your chart of accounts is kind of like the backbone of your entire accounting system. Each account represents a category. So sometimes it could be physical accounts like a physical bank account, your credit card account, which would be a form of liability. But then there's all these other accounts which aren't actual accounts. You don't literally have an account in your bank that is just for your assets. They're instead kind of like categories. They're little buckets to say like, okay, the value that exists in this company, in the sense of like an asset, this vehicle, this is how much it's worth, and this adds to the value of the business. So kind of like the net worth of the business. You'll see accounts that go on the balance sheet. That's what this green BAL looking button is. It's not a button, it's just a label. And then you're going to see accounts that go on that you'll find on the profit and loss statement. That's what the P&L stands for. All these accounts that are being tracked with the amount you might expend on advertising and marketing, for instance, they will show up on your financial reports, and they do so in a very organized way. So on your balance sheet, you're going to have your assets. These will be physical things like inventory, or monetary things like cash in the bank. And then also on a balance sheet, you'll have your liabilities. This can look like your any business loans or your credit card. And you'll also find equity. This will be this will be things like an owner's contribution, which is like the money you might have put into your business before you set up any checking or banking in the business. This could look like the money you put into your business that isn't income from sales or services. And when you take all your assets and you deduct all the liabilities, what's left over is equity. And that will all make up the balance sheet. So these accounts affect the balance sheet. And then your profit and loss accounts will be all of your income, things like sales from the products you sell or money from the services you perform. And it'll also include your expenses, such as expenses for advertising and marketing, for any 1099 contract labor you hire on, as well as meals with clients or office expenses. And the profit and loss, when you take your income and you deduct all the expenses, what's left over is called the bottom line. It's literally the bottom line of the profit and loss statement, and that's going to be your net income. So it's important that when you categorize your transactions in your business, that they are attributed to the correct account. But the thing is, to make these accounts go up, so increase or decrease, they have to be debited or credited. Now, without going completely off the rails in an accounting 101, I want to quickly give you a brief overview of what debits and credits are, because they're the way that these accounts increase with money or decrease with money. Because QuickBooks, like most accounting software, is based on double entry accounting. And when people first hear the words double entry accounting, they often think it sounds complicated or mathematical. But the truth is, the core idea is actually very simple. Double entry accounting is just a system that helps us keep financial records balanced and accurate. So every transaction in a business is going to affect at least two accounts. That's why it's called double entry accounting. For example, imagine you go to Starbucks and buy a coffee with your debit card. Your bank account is going to go down, but you also gain something, the coffee. So one thing is leaving, another thing is entering the business. And business accounting works the same exact way. This is what we talk about when there's a transaction. There's a transfer of value. Now, this idea connects to something called the accounting equation, which is assets equals liabilities plus equity. This is the fundamental equation of accounting. In simple terms, assets are things that the business owns, and examples will include cash, equipment, inventory, computers, money customers owe you, and liabilities are the things the business owes. And examples of liabilities are things like loans, credit cards, and unpaid bills. So what's left over, equity, is the owner's portion of the business, and this could be one owner or multiple owners, such as with partnerships. So you could think of equity as the business's net worth after subtracting all the debts. Now, the important part is that every transaction has to keep this equation balanced, and that's the entire goal of double entry accounting. So let's look at an example. Imagine you start a business and you deposit $1,000 into a business bank account. Your business now has $1,000 in cash, which is an asset. And then the business also has $1,000 in owner's equity because that's money that the business owes to the owner. It belongs to the owner. So this keeps the equation in balance. Another example is, let's say your business buys a laptop for $500 cash. Your cash decreases by $500, but your equipment increases by $500 as well. So one kind of asset goes down, but another kind of asset goes up, and the equation stays balanced. Now we need to get into this topic of debits and credits. And unfortunately, this is where a lot of non-accountants get really confused. Debits and credits are the way we recorded whether one side of the accounting equation goes up or down. They do not automatically mean increase or decrease. And forget everything you know about debits as it refers to your personal banking, because this is something different. Whether a debit increases or decreases an account depends on the type of account. So you have to remember that some accounts carry a debit balance, so they're increased by debiting the account, and some accounts carry a credit balance, so they increase with a credit to the account. So starting with accounts that normally increase with debits, these are going to be accounts like assets, expenses, dividends, or owner's draw. So for example, if your business receives cash from a customer, the cash account will increase with a debit because it is an asset account. So we debit cash. For example, you earn $200 from a client and they pay immediately. You would debit the cash account for $200 and then also credit revenue for $200 because revenue is a credit balance account. So cash goes up and revenue goes up. The accounts are both increasing, and the transaction itself balances. It has a debit and a credit. Let's look at accounts that normally increase with a credit. These are going to be things like your liabilities account, equity, and revenue. So imagine you take a $5,000 business loan from a bank. Your cash increases, but so does your liability. In this case, the cash account is debited by $5,000, but your liability owed is also increasing by $5,000, and that loan account is going to be credited by $5,000. You need a debit and a credit for every single transaction, and the total debits and total credits in a transaction have to balance each other out. So here's another example using expenses. Let's say you pay $100 for internet service. Your internet expense increases and your cash decreases. And expense accounts are increased with a debit, while cash is going to be decreased with credits. So the entry will look like a debit for internet expense for $100 and a credit to cash for $100. So one way to memorize which accounts have a debit balance versus a credit balance is the acronym DED-CLIC. The DED part is focus on accounts that increase with a debit. These will include expenses, assets, and draws. And CLIC stands for the accounts that increase with a credit. And these will include liabilities, income, and capital or contributions. So if cash increases, we debit it because cash is an asset. And if revenue increases, we credit it because revenue, or income in this case, normally carries a credit balance. Now, I know you're probably overwhelmed and may not fully understand this concept. Don't worry, QuickBooks is designed so that you don't have to know this information in order to do your bookkeeping. It helps immensely when you need to make adjustments or if you run into issues. And I've made other videos that explain double entry accounting and debits and credits more deeply. But for now, don't worry too much if you don't fully understand this. Just know that this is what's going on in the back of QuickBooks for every transaction included into your books, for every form you complete in QuickBooks. These debits and credits to accounts are happening in the background. So just put it in the back burner of your mind if you ever run into a serious issue with your bookkeeping, because it's probably going to be due to something involving the double entry accounting system. All right, so moving forward, now let's talk about setting up the chart of accounts. So when we did the out-of-the-box setup and we told QuickBooks what our industry was, they created a chart of accounts that would most likely suit that form of business. And a chart of accounts, like the kind of chart of accounts you use, is a bit more art than it is science. At the very least, you're going to want to relate it to the income and expenses you need to report to the IRS when you file taxes. So if you're an LLC, that's a sole proprietorship, that's going to be your Schedule C. Here, I'll show you an example. So here's an example of a Schedule C. You have to report your income, and you also have to report expenses, but you don't just lob a sum of all the expenses in your business. They do get broken down into categories, like reporting the amount used for advertising, expenses towards vehicles, commissions and fees, and so forth. So at the very, very least, these are the kinds of expense categories you're going to want to track and monitor in your QuickBooks if you're an LLC. That's a sole proprietorship. And you're also going to want to track things like cost of goods sold, because that's another form of reporting, as well as information about the vehicle. And everything else will get thrown into other expenses, although you are going to have to detail what these are. You'll also be reporting I think you report inventory as well. So that's for sole proprietors, LLCs. Another form, if you are an S corporation, your form's going to be the 1120, and it's very similar. You're going to have to report deductions such as repairs and maintenance, compensation of owners, cost of goods sold. So, and for corporations, it's going to be the form 1120. So you get the idea. You're going to make sure you know what entity type your business is, and at the very least, the categories that need to be reported are going to be the ones that you use in your chart of accounts. Now, the other way you want to use the chart of accounts is based on the kinds of things you want to track. So for tracking income, for example, you're going to see that QuickBooks is going to recommend some very general categories like just sales or just services. But if you have a pretty big operation and you want to break that down in different categories, such as sales from consultation, consultation income could be one, versus maybe like course sales. If you have these like main categories for your types of products and services, that might be a good idea to break it up so that when you look at your profit and loss statement, you get to see those items and track exactly what part of your income is coming from each of these types of services and products you provide. And you could do that with your expenses too. Like if you want to break down, vehicle expenses into individual vehicles, maybe you have multiple vehicles for your business. That could be one way where you want to include extra accounts to track. So most of the time, what you need will be here right out of the box, and you can add accounts to the chart of accounts as you go and as you incur different kinds of income, expenses, and assets and liabilities. So to include a new account, you're going to go over here to the right and click New Account. For example, let's include an account that just tracks software subscriptions. You're going to have to select an account type, and this is going to help tell QuickBooks where on your reports the account will be listed based on its account type. So for software subscriptions, we're looking at a kind of expense, and it's just a general is going to fall under one of these. It could be dues and subscriptions. It could also be a form of office or general admin expenses. When it comes to expenses, you're going to want to try to get as close as possible because these detail types are going to help inform whoever's doing your taxes where to categorize the expenses. And if you're ever unsure what the account type of something is, you can ask AI, you can do a Google search. It's better to ask than to assume. So once you include the name, you can also include things like a description. You can make this a sub-account. So if we wanted to add this under like computer and hardware expenses, that could be a possibility. And then down here, this is letting you know which financial statement this account will be on and where it's going to fall on the list of accounts. So it's going to fall right after repairs and maintenance, but before supplies. So we're going to save and add this account. And now when we scroll down, we can see software subscriptions included in our chart of accounts. And before we move on to start adding products and services, I want to point out that you can find out information about each of these accounts by running a report, or in the instance of connected asset accounts, you'll want to use View Register, which is going to show the list of transactions that are posted in the books. And we'll talk more later about what it means when something is posted to the books. And then one other thing is you have the chevron down to the right of it. This is going to give you options such as editing the account, which will pull up that menu that you see when you create it. It'll also allow you to create sub-accounts under the account selected. You can also make the account inactive, but beware if you're going to make an account inactive because you don't want to use it anymore and you made an accident, you just want to delete it, you have to go in there and delete all the transactions first that were posted. Otherwise, just making it inactive won't get rid of the transactions already in the account. So do keep that in mind. You can also run a report. And we'll go over more about reports later on in this course. So for now, that's probably the bulk of what you need to know. Again, always search bars are great for finding something quickly. You can collect multiple accounts and use batch actions to either lock them or make them inactive. You can pull up accounts that are just on the balance sheet. You can pull, or any others, these other statements, or pull up accounts that fall into any of these other categories. You can also batch edit accounts, such as changing the name of the account. And lastly, under settings, you can pull up these columns, including other things like a detail type or description, whatever helps you find what you're looking for. Okay, so that's chart of accounts. Next, we're going to cover adding products and services. So to get to products and services, you can either click the Create button and go under Other to add a product or service. You can also go to All Apps, go under Sales and Get Paid, and click Products and Services. So we'll go to the Products and Services page. And right now, you'll see that QuickBooks has these three types of products and services that I don't think you can get rid of because they're in the back end, they're connected to certain functions in the software. Yeah, I don't think you can actually get rid of them. So you're going to want to include the individual products and services that you provide as a business. You want the list to be accurate and include everything you sell because especially if you're going to invoice clients, this is going to be the template items that you can pull up on the invoice. So let's add some products and services to SureJan Marketing Consultancy. So to add a new product service, you'll use the button here. And it's going to give you 5 different options, and it's based on what you select. There's different features in QuickBooks on how you can track the sales of these products. So for most of you watching, we're going to primarily be looking at services and non-inventory items. You can also include a bundle, which will be a list of different products already listed. You can also batch import items or import from a sales channel. So some of you may have books you sell, courses you sell, products like merch. You can pull up, if you use one of these channels, you can pull it up here, and this is probably the best way to map it. But I'm going to show you manually how to add your products and services. We're going to start with a non-inventory item. It's going to be a book. The book is called Oh My Nose. And of course, I made an icon for it as well, like that one there. And the inventory, the item type is non-inventory. And then you're going to need to add some other information. So category is not that important unless you have a lot of products to sell and you want to start bunching them into things like maybe based on where, like store products versus online products, if you have different locations. So if you want to use if you have a lot of items, that's one way to organize it further. But more importantly, is setting the income account. And for this book, it's a physical item. We want to include that it's sold to clients, so it can be put on an invoice. You can include a description if you want. You'll want to include a price or rate so that this comes up automatically on your invoices. And then most importantly, you're going to select that income account. Remember in Chart of Accounts, we talked about how you can have more general accounts like total sales, or create accounts for more specific categories of income. So for this, we're just going to put in the general sales of product income since it's a physical product. Now, I don't know how much this will apply to many of you watching, but if you were to purchase that item from a vendor and then basically distribute it through your business, you'll want to include I purchased this from a vendor, so it can be included on things like bills, and then you can include a typical purchase cost, which both things like the price and purchase cost can be updated when you're doing individual invoices. So if it's something that changes, don't worry, you could just you can use this or not. And you don't have to put a preferred vendor, but it'll help with auto population of your forms on QuickBooks. And most importantly, you'll want to choose the expense account. So right now it's under purchases, but if I was personally running a business that products from vendors, materials from vendors, then I'd probably include something like printed books as an expense account for this particular thing. But we'll just not include this as a purchase. We'll just say that the business makes and sells this book on their own. So once you're done, you'll hit Save and Close. And now you'll see the product listed under your products and services. All right, so we got a couple more products and services to add for this business. The next one is a course. It's going to be a non-inventory item, and it's called There's Got to Be a Way to Earn $20,000
There's got to be a way to make $20,000
per month from YouTube course. And this goes for, I did not make an image for this, but we'll go down to sales and include a price of $699. And this one will include in sales of product income account. If I always wanted to see the individual sales on my profit and loss statement, then I would want to include income accounts for both of these products. But you can also run product reports in QuickBooks, so I'm just going to leave it in these general categories. So we're going to hit save and close. And then we got two more products. We got two more services left that we're going to include on this list. The first is consulting package number 1, the Just Do What I Say package. To type a service. And the rate for this is going to be $800 per month. And that's all the information we need. So we're going to hit save and close. And then we're going to add one last service for this marketing consultancy, for this marketing consultant agency. And it's going to be consulting package number 2. I'll do it myself. And we'll add a description here. This is going to be normally $1,400 a month, but we're also going to include ad fees that will be billed to the client. And these are going to be ad fees. This will also include ad fees that will be billed to the client, and I'm going to show you how to do that later. So the income account for this is going to be services, and the price rate, as it's going to show up on the invoice, is $1,400. And I'll just note that make sure your names are professional, because these are the names of the items that will show up on invoices for clients to see. So if you have a name for your service and products, go with that. Okay, so now that we've added our products and services, let's add some clients to QuickBooks. Now, assuming you're using QuickBooks to do your invoicing, you're going to want to keep somewhat detailed records of clients in QuickBooks. So to add a client, you can go to the Create button and click Add a Client. You can also find information about clients and adding clients straight under the Customer Hub, under Clients and Leads, or I think it's just that one. So we're going to add customers manually for the first time. So we have a couple clients that SureJan is going to be helping. The first one is the business main character fitness. That client who owns it is named Don John. So when adding a client, you can include information. You'll most definitely want to include their email at the very least and their name. Here you're going to see how their name is displayed. This is important because it's going to be how you can search for this client in QuickBooks. So if you work with them one-on-one, I suggest using names, but you can create a standard in your business for whichever you prefer. You can include other things like a website, phone number, as well as an address. And if you want, you can include any notes you have about the client in their file as well, and save information such as payments. You can also include client types if you want to use that feature to organize your clients in QuickBooks. You can create custom fields related to this as well, and use other things like this CRM information. But on a very basic level, we just need their name and email. So we're going to say donjohn@noemail.com and save it. And so once you have clients, under this, remember under the apps, the customer hub, under clients and leads, you'll find a list of all of your clients. And this is their client card. Under this client card, you could do things like include a new transaction, like creating an invoice or an estimate or a payment link, or provide the client a credit memo if you need to give them credit to your business. And you'll find other things like a financial summary, such as any open balances they have in their invoices or the amount of overdue payment, and basically see all the information related to the client, such as their transactions, whether there's recurring transactions, projects, which we'll talk about later, whether they have any late fees or a customized late fee. So definitely explore, if you want to use QuickBooks as a little bit of a CRM, how to use the client section. All right, we're going to add 2 more clients. So the next, so we'll go back to the list. You can also include leads. This is an AI feature that you can connect to your email. I don't personally use it or find it that helpful, and it definitely gets things wrong. But you can use other methods to include a CRM in here as well. So for the rest of the clients, we're going to include 2 more. We got another business called Freak in the Spreadsheets Consulting. And that's going to be owned by Chip Formula. We'll do Chip Formula at noemail.com for an email and include them in the list. All right, so now you can see the list of clients here. When this list gets long, you can search for them up here, or search for them in the main, search search bar here. All right, and so for the last one I'll show you, when you just pull it from the Create button, you can add a client under the customers list. The last business is Cozy and Nosy Booksellers, which is owned by Elliot Page Turner. Cool. All right. Oh, just gotta have an email. We'll do EP at blah 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 at noemail.com. Cool. So now we got a list of clients. The next list of people you're going to include in your QuickBooks, and this one I would say is arguably more important, is your vendors. So vendors are different from clients. Clients are going to be the people who they are bringing you income. You're providing them a service or a product. And for vendors, they're the ones providing you a service. So this could be a contractor. This can also be your bookkeeper, your law firm that you use. Those are all vendors, including even like Amazon when you buy things from Amazon.com. I run light on QuickBooks, so you don't always have to include every single vendor you use in your vendors list, but you do, I can't emphasize this enough, you do want to track the vendors who are subcontractors. So vendors who need a 1099 at the end of the year. And as of right now, anyone who earns more than $600 a year from your business is owed a 1099 from you to let them know how much you paid them so they can report that on their own taxes. And you're going to have to report this to the IRS as well. So you definitely want to track your vendors. And there's the same kind of input as customers where you're going to include their name and information. But down here, most importantly, under additional info, for every vendor that you pay money to, I recommend clicking that you have to click this track payments for 1099. And I recommend doing this for anyone. Even if you don't think you're going to reach that $600 threshold, track it anyway. It's better to be safe than sorry when doing anything that involves the IRS. By having these payments tracked, every time you include the vendor under your categorized expenses, the QuickBooks is going to track for you the amount that you've paid to them, and therefore will let you know at the end of the year who needs a 1099. And QuickBooks can generate these 1099s for you. So definitely click this button for everyone you add as a vendor. And another area to note here, under additional info, you can include a default expense category. So if you frequently have a 1099 contract who are just contract laborers, and that's the account you want to track this under in your chart of accounts, you can include that default expense category, and it'll be suggested every time this vendor comes up in the bank feed. We're going to include a couple of vendors. The first one, the business is called Control Freak Studios. Studios. And that's run. This is a graphic designer named Riley Render. And we'll definitely want to be tracking 1099s for Riley Render. They're a solo business that does this service for other businesses. So we'll make sure that button's on. We'll include an email. And hit save. And if you need help with anything you see here and don't want to do it yourself, I'd be more than happy to take you on as one of my clients. You can head on over to the Profit Logic homepage. There you could fill out a form, let me know a little bit about your business and what help you might need, and set up a time to talk with me, and I could tell you how I might be able to help you with your bookkeeping. So now that we have a vendor, you're going to see, kind of like with clients, you'll see outstanding bills. If you use bills in QuickBooks, you'll see who you owe, if there's any that are open, and how much you've paid. And then on back to the individual vendor, you'll have their transactions list, a list of their details. You include attachments. With 1099s, you do need to collect a W-9 from these vendors. They're supposed to fill it out when they start contracting work with you. I'll show you what that looks like. So here we have a so here we have the W-9. You do need to give this to your contractors at the start of work, and you can store it in QuickBooks or in a Google Drive somewhere. You are responsible for collecting this information. And this attachments area right here might be one place to do so, to store the W-9. You can also include notes. And then under new transactions in the vendor section, you can do things like track time activity, create a bill, create an expense or a check, or a vendor credit if a vendor owes you credit. All right, let's add a couple more vendors. So next we have the Ring Light District, which is going to sell equipment. And we'll just save that as is. And I think that's good for now. Okay, so we went over adding the list items, the products, services, the customers, the vendors. All these lists are living inside of QuickBooks. So if you want to see the aggregate of all your lists, if you go up to the gear icon, go to this list section, you can access these lists. So mostly it's going to be your products and services. They moved vendors and customers to their own pages. You'll find your chart of accounts under the list as well. Okay, so now that we have some folks that we're working with, let's talk about creating invoices. So if you go to the All Apps section and you come to the Sales and Get Paid app, you're going to find your Invoices page right here. You can also create an invoice by going to the Create button and clicking Invoice. So let's start by going the app route. Now, when you first set this up, QuickBooks is going to invite you to use QuickBooks Payments. If you plan on using invoices in QuickBooks, I recommend just using QuickBooks Payments. That way, everything's collected in the electronic invoice and then sent to you pretty quickly. It's a pretty quick service. It does have a fee, though, kind of as if you were to use PayPal or Stripe. All these banking services have rates that they charge, usually a percentage of what the invoice was for. And I think it's about 2.9% as of July 2026. So it can change with time. But you'll go to create an invoice. Here you can include invoice options, such as including the option for a bank payment, a credit card debit payment through Apple Pay, and so forth, or through PayPal and Venmo. You can add these options on your invoices, so your clients have a lot of different ways that they can pay you. So we'll hit confirm and continue. And when you open up an invoice, you're going to have a lot of options. So at the top here, there's a couple different tabs. We're under the Edit tab, so we're going to be able to edit things like customizing the look of the invoice, what payment methods are going to be allowed. And then under Email View, this is where we're going to see a preview of what the email they receive looks like. Under Payer View, when they pull up the option to pay, this is going to be a sample of what they see. Under PDF View, you'll see what a PDF would look like if you send the invoice out as a PDF. So under Edit, this is where we're going to include the information to create an invoice. We're going to, let's say one of the clients signed up to do consulting. So for one of the consulting packages, we're going to say Don John signed up for the consulting package number 1. And here you get to change the invoice number if you want to use a numbering system. Otherwise, it's going to just calculate them automatically. You could choose the terms. Due on receipt means the invoice needs to be paid immediately. Otherwise, net 15 would mean like the invoice is due within 15 days or due within 30 days or 60 days. You can also manually change the invoice date and the due date. The invoice date is the date the invoice is created, and the due date will be when it's due. Now, under products and services, this is where you're going to include whatever is going to be sold to the client. So we said this is going to be an invoice for just do what I say consulting package. And you can include a description if you like. Here we have the option to change the quantity and rate. If you don't like having this on the invoice, if you go into the settings in QuickBooks, the invoice settings under there, you can take these off and just include only a rate. You can take off quantity and only include a rate. And if you set up sales tax based on your location, sales tax can be automatically calculated. This is really important, especially if you're selling products, physical products. Some digital products, depending on the state you live in, do look this up, you might have to owe sales tax that you're going to have to pay regularly to your state government. So QuickBooks can track this for you. And I think if you set up, I think you can set up so they pay your sales tax for you. I'm not sure on that one because I'm in Oregon and we ain't got sales tax. So we're going to not set that up right now. You can also include discounts, payment instructions, any notes to your client, internal notes you want to use within your system, like let's say a sales agent or someone else is creating this invoice and you want to keep some notes on the client that you get to see internally, you could do that. Same thing for memo. You can include attachments, especially if it's like a customized plan or package. You might want to include information that the client can access here. So that's all the individual options for what's on the invoice. On the right here, there's some other options such as customizing the look and what's included on here. So if you don't want to include the invoice number, you don't need it, you can take that off. And here you can also take off a quantity if you prefer. And the rate. You can include some custom fields. We're not going to set that up right now. You can change the individual payment methods. When your QuickBooks payments are set up, that you can add PayPal as an option, or I think it's Klarna that they use, or Affirm, so that they can do payments with a third-party servicer. If you have a recurring customer with a saved payment method, you could turn that on and just have it charged automatically. So next, under payment options, you can include a section for tips. You can remove anything you don't use, like discounts or deposits. And you could include late fees as well. And this will happen automatically based on whether or not the invoice is paid on time. Then down here under design, this is where you can change the template, such as using a standard template instead. Modern has this option for some color. You could change the is it hex number? I forget. To be related to your brand colors, or use one of these preset options. And you can change the font as well to one of these options, whichever best suits your company. And you can include the payment link on the PDF or turn it off. Here you can choose to make it a recurring invoice, although be careful. I think when you click this option, if you have to start an invoice this month and the recurring is like earlier in the month, you might have to set them up separately. So just be careful of that. But you do have the option to create recurring invoices that can automatically send emails. So that's it for scheduling. Under manage, that's just the toggle on and off for this sidebar here, these options here. So when everything looks good, you're going to save the template. Oh, because now it's a recurring invoice. This is what I mean about you got to be careful with recurring invoices. Sometimes the settings will just take you in a different trajectory. So now we got to go find it. Go under, let's go back under. Okay, so with the actual invoice, when it's not a recurring invoice, you're going to be given a couple of options. You can save and just have it as a draft, or you can review it and send, or share a link to the client. So the invoice is going to be created, and under the link option, you could just email it to them if you have a different kind of email you want to send. Otherwise, you're going to hit review and send. And here you're going to get to see what it looks like when they receive it. You can text your customer. You can now send text, so you can text your customer with the invoice. You can make adjustments to the template invoice email. Otherwise, you'll get to see what it looks like here, how they'll get a view and pay button. And once everything looks good, you'll hit send invoice. I really hope that person doesn't exist. Okay, so now the invoice is created, and under the invoice list, you'll see we have an open invoice because it was created last month. You'll see the number of days it's overdue. And when you receive payment for this, if you receive a payment, it's going to come through. If it's going to come through the banks that are connected to QuickBooks, you're going to match it in the bank feed. But if you accept payment outside of like let's say you get a cash payment, then you're going to have to come back and click receive payment. And under receive payment, you'll be able to adjust who the client is, what date you received the payment, what method, where it was deposited to, and what invoice was involved. But we're just going to leave this. And again, as we talked about with the clients page, under clients and leads, now you'll see under this list who has an open balance and how much it is. So that's invoices. Invoicing is pretty simple in QuickBooks, and I believe I found when I did use it, I found QuickBooks payments to be really fast. So I definitely recommend using this as an invoicing option, although I know other payment processing providers such as Stripe, Squarespace, if whatever works best for you and your business and your clients, use that one. But I do find QuickBooks to be relatively easy to use. However, that means just keep in mind, whatever invoicing system you use, you have to be willing to use that software regularly. So if you don't like coming into QuickBooks, then maybe stick with a different provider that you're more comfortable with. Alternatively, if you are invoicing in QuickBooks, maybe this forces you to do your bookkeeping as well and stay on top of this financial oversight. So whatever works best for you and your business. All right, so now that we have most of what we need set up, let's get into the nitty-gritty of bookkeeping, which is 80% just categorizing transactions. So to get to bank transactions, if you go under all apps and accounting, you'll get to bank transactions. But like I recommended earlier, be sure to bookmark this page. It is the page you will use the most in QuickBooks. So using the bookmark section is just really quick. At first, you're going to have to connect your bank accounts. And let me use this moment to say it is crucial. The IRS requires, good accounting requires having a separation of business from personal accounts. It's okay to accidentally charge something personal on a business card every now and then, or buy something for your business on your personal card. But overall, your business expenses and income need to flow through their own business accounts and completely separate from your personal ones. So before you even set up your bookkeeping, make sure you already have a business checking and savings account, a credit card, business credit card if you need that. Do not connect your personal accounts to QuickBooks. There's this rule of just keeping separation. It's a principle that you really need to follow. So only connect accounts that cover business transactions. So when you do it for the automatic bank feed, you're going to find your bank in here. I will say the bigger banks tend to connect more easily and work better with QuickBooks. Sometimes local credit unions can have issues, but if you have an issue connecting your credit union account or your local bank to QuickBooks, call up the QuickBooks help support desk. Usually they can get it worked out. Otherwise, and in the case of today, you're going to have to upload your transactions manually. I don't recommend this for the long term. This is part of what makes bookkeeping software really convenient, is to have this automatic import of transactions. But because we're working with a fictional business, I made some fictional bank statements that we're going to use. So I'm going to hit upload transactions, and here we're going to upload a file. We're going to set up a couple. So I'm going to upload a file, and we're going to set up a couple of business bank accounts for SureJan marketing. So the first one is a checking account. And this is where we have to tell QuickBooks where these transactions are coming from. So what bank account is it? Because this is going to be added to your chart of accounts. So we're going to have to create a new, I recommend creating a new account. Don't find, unless you manually edit it, be sure to create a new account for each bank. Do not have a general bank account as your chart of accounts. So for this one, the bank is Scrooge Duck Vault Checking. And the account type, this is important, is bank. So even if you make sure a bank is labeled as a bank and your credit cards are labeled as credit cards, because if you remember when we talked about debits and credits, banks are going to increase with debits, but credit cards are going to increase with credits. So all the accounting in the background for QuickBooks, if you upload a credit card as a bank, it's going to be this negative number that makes 0 cents, and it's going to mess up your balance sheet. And it's going to mess up all of your financial statements. So be sure to make sure you have the appropriate account type. And for type, it's a checking account. We're gonna include a opening balance as of 06/01/2026, and here it's going to show up on the balance sheet, and we'll hit save. All right, we can continue. So is the first row in your file a header? I uploaded a CSV file. I think PDFs work as well, and the answer is yes. How many columns show amounts? We have 2. So I'll show you the actual statement we're uploading. It's going to look like this. So we're including basically what we see. We do have 2 columns with amounts. One is a deposits column, one is a payments column. So we got to let QuickBooks know that. The format of the date, I think this is going to be the closest. And then now the second step, we have to map what's on the file to the field that will import the information. So we have to match date to date. I can see here, I think it's column 1 is going to have the date. Description is going to be column 2. Money received, deposits will be column 3. Payments are money spent is column 4. And no check numbers. All right. So now they're going to show you a list of all the transactions to import, and it'll note anything that looks funny. So here we're having a problem with the dates, and it's because they don't have years. I have to change that real quick. All right, cool. So that worked. We're not going to include these lines that were at the top. As you can see, it uploaded the statement period and balance. So we're going to leave that off, but we're going to import all these other transactions. So, you know what? We'll just select all, take off these, and then we're going to take off the statement ending balance as well, and continue. And now it's letting us know it's going to import these 16 transactions. All right, let's see. Okay, so now that we've added this bank, we can see in QuickBooks how the bank is listed as a card here. And one of the first things you're going to notice is that bank says 0 and what's posted says 5,000. So there's a big difference between these two numbers, because when the transactions come through the bank feed and they're in your pending column, they're not posted to the books yet. You have to go through and categorize them and adjust them and then post them, and that's when they'll be added to the books. So they have to have a category. And once they're posted, then they become a part of the books. So make sure you're always up to date in the pending column if you want your financial statements to also be up to date. And you'll see this number here is going to tell you how many outstanding transactions there are. If you need to edit this, so for example, one thing I like to do with my clients, go edit account details. If you have a lot of cards, I recommend including the last 4 numbers of the card for that account at the beginning, so that you readily know which account is which. But you can make other adjustments here. Okay, so we're going to upload a couple other accounts, and then we'll go over how to work with and categorize transactions. So now, again, under bank transactions, you can add an account by going to this chevron button over here and uploading from file, or if you can automatically upload your account or link your account, you'll hit the link account button. But for now, we're just going to upload files. The next one is going to be a savings account. So I'm going to quickly upload this myself. So if you use the PDF version of this, it's going to show you the PDF, and it's going to look something like this. It's going to try to map transactions for you. And in this statement, we have one transaction, but some information about the account listed as well. We just want to include the one transaction with a date of June 30th. Okay, so now we've added all the accounts. There's 3 accounts in total. There's the Scrooge Duck Vault Savings, the Scrooge Duck Vault Checking, and then we added a third one, Chase Bank, which is a credit card. So once you have all of your files connected, once you have all of your accounts connected, we got to make sure the balances are right in QuickBooks. So we'll go over adjusting balances momentarily, but first let's start with just adding some transactions in. So everything's connected. This is going to be the majority of the work you do inside of QuickBooks, and that's just getting everything categorized so that your financial statements are accurate and useful. So I recommend for when you do have your bank accounts connected, at the start of your bookkeeping session, there's going to be this button here that says update or refresh. Make sure you click that when you first get into QuickBooks, because you'll see on the bottom here when they were last updated will be this little number right here. This is 13 minutes. But sometimes if you don't come into QuickBooks for a while, it might not refresh for a number of days or weeks. So be sure to check to refresh when you first dive into the bank transactions. But we're going to go over these one by one. So first we have our savings. So with transactions, you're going to see this more clearly here. So with transactions, the major transactions you're going to see, so income from things that you sell, expenses for business expenses that you use to help run your business. You're going to see transfers. So money's moving from one account to another. Just because you receive a deposit doesn't mean it's income. And you're also going to see owner deposits or withdrawals. So taking money out of the bank. And this is why it's really important not to judge your business by just looking at your bank account number, because it's not going to give you a good idea of whether that money is from sales or whether it's from money you put into the business, or maybe you did really good in sales, but you've taken so much out that it seems like the business doesn't have much. Again, this is why it's so important to regularly do your bookkeeping and read your financial reports to get true financial knowledge of what's going on in your business. So with bookkeeping, you're going to categorize each transaction according to one of those kinds of transactions that you're going to connect it back to a account in the chart of accounts. So here, let's start with the Scrooge Duck Vault checking. So when you're working out of the bank feed, you're going to see a couple columns here. You're going to see a list of all your different transactions. They're going to have a date. They're going to have a bank description. So this is what's the information, the memo that's being sent between banks on each transaction. You're going to see the amount that was either spent or received. You're going to have an option to include something, to include a file like a receipt, or leave a comment, or get information from other people that's more related to accounting. You'll have a from to column. This is where you can add a vendor or a customer. And then the categorization or matching column. And then lastly, of course, the posting action, or these options here to split the transaction up into a couple of different types of transactions, create a rule out of it, or exclude it. So on these transactions, this is what you're going to see when you open it up, but you can click on them individually to access more detail and options. So you can see the full memo. You can also click whether to make this item billable to a client or a project. You can upload supporting files and basically access all the options here. Now, one thing that might feel confusing about QuickBooks is this match versus categorize option. You're going to need to categorize all your transactions, but sometimes you already have records of the transaction in QuickBooks. So for instance, down here, QuickBooks is trying to match this item received from that your bank received this money to an invoice that was paid on the same date. And it's important, if it's already recorded in QuickBooks, to be matched to the actual event, the actual transaction in the bank feed. Otherwise, you're going to have duplicates. You're going to have numbers that are inaccurate. So I want you to think about this as this isn't your physical bank. This is a record of your bank accounts. And QuickBooks has its own record of, which is your books, your bookkeeping. And now we're pulling in information from the actual accounts and trying to match it or fit the pieces into the chart of accounts in your QuickBooks. So let's go over these one by one. We're going to change the date to be beginning to end. So this first one, we have a consulting package payment. We're going to say it was from customer chip formula. And the most important thing you want to always check is which account it's going to. When it says account, it doesn't mean this account that we're in right now. It means the account as the chart of accounts, the category. So for this, it's a kind of income. And we said we're going to track all of our product income, our consulting packages as service income. And then there's a column here for product services to connect it to. This will help keep your information accurate as well if you're tracking your sales of individual products in QuickBooks. So this was the more expensive $1,400 package. And we're going to hit post. Next, we have an owner's contribution. And this is going to be a kind of equity account. It's owner's contribution. So one way, you don't have to always just scroll to find the account. You can also start typing it in the match categorize section. So we have a owner investment, and we'll hit post. Now the next two are going to be matches. So the next one is a match. If there were multiple invoices, this would it would say something like match two possibilities. We know that there's only one invoice that we made for $800. However, there's two received payments for a consulting package. You have to be sure to check things like the date. You could click and read the memo if it's going to give you any extra information. But make sure to, if we want to keep things accurate, match the invoice. It'll show you the date here. It's going to try to match it. We know it's on the 12th. It was paid on the 12th, but this one's from the 26th. So that's probably not the invoice payment that matches to this invoice. Instead, it's probably going to be this one down here. And we're going to hit match. Now that matching option is not going to show up on this other payment because there are no more outstanding invoices. So if we go back to the invoices list, we no longer have outstanding invoices. The Don John invoice was deposited. It was matched out of the bank feed. So now we're squared away with the invoices created in QuickBooks. An invoice is just a form that says, hey, this money is owed to me until the client pays it. Once it's paid, it's no longer owed. All right, so let's keep going down the list. We're going to go by date again. So we have a couple more sales. We could just very quickly post them, but we did decide we want to be more selective about tracking sales in QuickBooks. So we know our $19. So we're going to add a little more detail, but it's important to note that, remember we said this product, this book, Oh My Nose, we said earlier it's a $20 product. However, we only received $19. I want you to notice that it's a Stripe deposit. So many of you who do consulting might have products, or you're receiving payment outside of QuickBooks. You might be paying for fees as well. So if we just include all these sales, it wouldn't be an accurate depiction of what income was made. Even though we focus a lot on like the net income, when we're telling the IRS how much we made and how much our expenses were, they have to be accurate. So we actually made $20 and there was a $1 fee. However, Stripe already took out the fee. So I'm going to show you later how to make adjustments in your bookkeeping to include that accurate information. So basically how to include that dollar fee for every book purchase in bulk to give that full accurate view of what you actually, of the actual income you made and the actual expenses you incurred. This is really important if you have products that are going to have sales tax. And if you are tracking all your sales tax in QuickBooks, you still owe sales tax on the full $20, not the after the math $19 after you've had after you take out the Stripe fee. So we'll go over later how to make that kind of adjustment. All right, so for these, we do want to track them to a product and service. It's the Oh My Nose book, and we want to make sure the account is in sales of product income. We'll have to. So instead of trying to create a sales receipt, it's gonna select that account accordingly because we set the income account already when we set up the product in QuickBooks. So we'll post that. So for these, we're gonna have to go into them individually and include these books. The transaction type is becoming a sales receipt, which means it's just a fancy way of saying a confirmation that this item was sold. So next we have a Stripe payment. This is going to be for one of the courses. Again, it has the Stripe fees taken off of it already, so we'll handle that later. But for now, we're going to include the YouTube course and post it. All right, next on the list is a transfer. So so the business owner transferred money, paid down a credit card, put $1,000 on the credit card, which is also connected in our bank feed. So here we see under Chase Bank credit card, there's a received of $1,000, and QuickBooks noticed that and is trying to give this option of a pair. And since we can confirm that's accurate, the dates match up. It was on the 15th. Realistically, sometimes it takes a few days for transfers to occur, so your dates might not always match up. In that case, if it's not automatically matching, click on the transfer amount, click edit. You're going to select type transfer. You're going to include the count that it was transferred to. So that was a Chase Bank credit card. And you can apply a post-it. And that should tell the other side of the transaction, QuickBooks wants to match the transfer. So then we can include that. All right, so we have a couple more sales we need to categorize. These are all just Stripe payments. So these products were hosted somewhere else and then paid with Stripe. So we're going to include the courses. If we really want to drill down on customers, be sure to include customers as well. But notice that QuickBooks is going to try to suggest categories or customers based on past transactions, and it's not going to always get them right. So double check. Notice if we just did the easy thing and posted everything that the category seemed right, the client involved might be wrong. So if you want to be meticulous about your books, do double check everything. So let's say we know that it was Chip Formula who bought this course. So we're going to update that and post it. And here we have a consulting package payment. For this one, let's go ahead and create another invoice. It was June 26th. And for the client, we'll do Chip Formula, who decided to go with the consulting package. So we're going to save that and close. And now you can see QuickBooks is going to want to try to match this transaction in the bank to that invoice as a form of payment because the dates line up. So we'll hit match. All right, next we got an owner's draw. So this is going to be for all you LLCs out there who are sole proprietors. If you're also an LLC but a partnership, make sure in your chart of accounts that each of you have your own owner's draw and owner contribution equity accounts. But let's say we know it's just one owner. Marcia Brady's deciding to pay herself. So with an LLC, you're not necessarily on payroll. You just pay yourself with whatever income you want to take out of the business, or any money you want to take out of the business, because everything's going to flow through to your Schedule C on your personal 1040 tax return. So you don't have to be on payroll when you're a sole proprietor or LLC, but you do have to track the money that's coming in and out of your business. So for this, make sure it's a form of an owner's draw. And when that looks good, you can post it. All right, for the next one, we have a Zelle payment to Greg Brady. No relation. For this is one of those times where it's really important to include your vendors. So let's say Greg Brady helped Marcia with getting some of the marketing work done. I don't know, maybe edited a YouTube video or did something to help out and was paid $700. We already added, did we add Greg Brady? I don't think we added Greg Brady as a vendor. So let's make sure we add a new vendor. And again, always check track payments for 1099, because when we save this and include Greg as a vendor, we can pull up a 1099 report for Greg at the end of the year, since he's definitely making more than $600 in the year. So we're going to include the category. It's a contracting fees or contract labor. We'll hit post. And lastly, we have a transfer to savings. This is the example I showed you where sometimes, even though both are in the account, if QuickBooks doesn't have enough information about the bank description to know which account it came from, it can't make a suggestion. So this is when we select the transfer transaction and we click edit, and we change the transaction type to transfer. And you select the account it transferred to or from, and we apply and post. And now we should be able to see, whoops, they are both listed as spent. So I need to undo this transaction. It was imported wrong. So here's another learning lesson. So here's another lesson that you're going to learn on the fly here. So I accidentally imported this wrong. It should have been a received transaction of $500. So I need to delete this transaction. And there's two ways to delete things in QuickBooks. The first is, this is absolutely wrong. So I'm going to completely... So one way is to exclude the transaction. And then once you exclude a transaction, it's not going to go in the books. It's not going to hang out on pending. It's going to show up in the excluded list. That way, whoever works on your books in the future knows what happened. You rarely want to delete transactions because so much of accounting is highly dependent on telling the story of how money moves, even when it's a mistake. You want to keep all the information in the books if you can. But because this was just an error on my part, I really want to get rid of the whole thing. So excluding it does not always take it. It can take it off the books, but it won't delete the transaction entirely. Instead, we have to go to the chart of accounts. And we have to go into the register of that account. It was Scrooge Duck Vault Savings. We'll click on View Register. It's going to pull up a new tab. You know what? You do have to add the transaction first. So let's add the transaction. So now it's posted. If we refresh the register for that account, once it's posted, you'll see the transaction exists on the bank register for that account. If you click on the transaction in the register, you can fully delete it. So now it's completely off the books. The transaction is deleted, and it's not living. Never mind. Okay, so if you want to delete a transaction, you basically can't fully take it off the books, but you do need to exclude it. And that's what we're going to do. It's not going to go on the books. It's not hanging out in pending. But we do need to I'm going to manually make this transaction. So it was a transfer. It was a transfer from the checking account to the savings. And the amount was $500. And the date was the 30th. By the way, if you just type out the date, so I put 06/30/2026, and then you hit tab, it'll automatically populate the date for you. You don't have to just do that or type in with a bunch of the hash marks. So we're going to save and close this. So now it's posted to the account. You're not going to see the transaction, that the deposit form you just filled out. You're not going to see it in the posted section. But it's supposed to match up. All right, so for this one, we're going to edit. There's a transfer to the savings. We're going to apply and post that. All right. If there are any problems, it's going to come up in reconciliation. Okay, so we're going to get to how to fix these amounts. If everything's up to date, you're going to want your bank amount to match the posted. Otherwise, there's something wrong in the books that needs to be fixed to get them right. Sometimes you'll find those issues in reconciliation, which we're going to go over next. But sometimes you have to make adjustments to things like an opening balance, and we're going to solve this problem soon. But we have one more account to finish with transactions, and it's this last one here. Looks like it got mad. Oh wait, we're in the pending. Okay, we have one more account to to go over transactions. So we have this Adobe subscription. Just automatically picks up that's a software subscription. We'll include that. Same thing for Google and Kajabi. These are all quick transactions to enter. And what's this? Oh, looks like someone went to McDonald's. Had a little McDonald's. So if the business owner might be working all day and then decides I need to go get lunch, and ends up buying lunch with a business card. So this has always been an area of, this is something that has changed with tax law. What of meals can be deducted and which meals can be deducted. From my knowledge, right now, meals are only 50% of meals can be deducted as business expenses. It doesn't mean you should do that in your books. Your tax preparer will know about this and will do the calculation appropriately, or your software will do it. But the only meals that are actually allowed to be deductible are those that are occurring with a client or a potential client. So if you're meeting with a client and you're talking business, that portion of the meal that's about business can be deducted. But if it's you as a business owner just treating yourself because you're burned out at work, that's actually not a business expense, and that instead needs to be treated as an owner's draw. The other time I think you're allowed to deduct meals, look this up, double check, is also when you're traveling. When you're traveling for a business purpose, but that might not be true anymore, so do look it up. And I think that deduction would be 50% as well. Entertainment is no longer deductible either, so any entertainment fees made for the business, you can include those on your books if that's a business expense, because if it's going to lead to better connections or a gift you're doing for employees, you still want it on your books for your own internal record keeping, but what actually ends up being a deductible business expense will look different on your tax return. But if you're a sole proprietor, no one was at lunch with you, you just bought lunch for yourself, that is an owner's distribution. So we're going to change this from meals to an owner's draw and post it. So that's not going to be an expense that comes up on our profit and loss statement. Okay, and this last one is a Google Ads fee. Remember we talked about in one of the consulting packages, it's not just the consulting fee. The client's going to also have to pay for their own ad fee. So this is a marketing consultant agency. We're going to make this expense billable. So when you click on the expense, let's say so it's Chip Formula at the beginning of June. We incurred some fees on behalf of this service. So this is a business expense, but we need to receive this money from the client. So one way is to edit it in the bank transactions feed. You can select billable to client or project. So we're going to include that there. This is one I think it would be good to make an account for, so we'll add a new account. Do add fees for clients. And this is going to be a form of expense. It's technically a cost of goods sold account. You know what? I'll do cost of goods sold. And we'll do other costs of services. So we have the fee here and the ad fees for client. And then actually, you know what? Let's undo this. Okay, so let's provide all the information. We know it was for Chip. It was an expense, and it's going to be an ad fee for a client. And the client is Chip Formula, and it's going to be billable. So we're going to check billable and hit post. And now we should be done with all of our categorizing our transactions. So now I'm going to show you how to bill your clients for those added services or fees. So it'll be an invoice. We're going to invoice them. And when we add the client, once we incurred the expense, if we include it and make it billable, if we have it in QuickBooks already, when we pull up the client, there's going to be this suggested transaction list on the side here, and you'll see the billable expense come up. Always check the date, what it was. We know that this is the correct fee. It was for this client. So now we're going to send that client this fee that they owe us. So we'll double check the invoice, make sure it looks good, and then we'll save and close it. That was taking it out of the bank feed. When we talk about projects, we'll go into other ways of manually adding billable expenses that you'll match later in the bank feed. So now that all the transactions have been posted to the books, let's talk about reconciliation. This is one of the most feared aspects of bookkeeping that business owners will completely avoid. They'll never reconcile their books. It seems hard. I'm here to tell you it's actually pretty easy, and it's very important for making sure your books are accurate and that there aren't mistakes, there aren't duplicates, and everything is being mapped accordingly in QuickBooks. So to perform a reconciliation, this is something you should really be doing monthly when you get your bank statements. You're going to have to go over every physical account and reconcile it. So to do a bank reconciliation in QuickBooks, again, this is one that should be bookmarked. If not, go to Accounting and then go down to Reconcile. There's an option to use AI reconciliation. Maybe we'll try that with one of them. But for now, I just want to show you how you would do this, how you would traditionally do a reconciliation. So the thing you're going to do is start with the account. We'll start with an easy one. We'll start with the savings account. So here's the statement. You're going to want to have your statement ready, and you should have a statement for each month. You don't want like a list of all your bank transactions. You want the monthly statement. And when you have the account connected, or if you manually uploaded it, you should be able to find your statement already in QuickBooks. Most banks will connect, but this can be really finicky, and it really depends on your bank and their connection to QuickBooks on whether they'll auto import statements for you. So what you're going to need is your statement and add the following information. So you're going to need the statement ending balance. In here, let's see. Okay, so we have a starting balance of 1,000. The statement period is from June 1st to June 30th, so a full month. The ending balance is going to be this one here. It's $1,500. So we'll include that there. And you're going to need the statement ending date, not the beginning date, the ending date. And once that info is correct, you're going to hit Start Reconciling. And you're going to notice you're going to see a handful of things here. So there's this little equation going on. You'll have the statement ending balance here. And then you'll have a cleared balance. So when you add transactions, checkmark transactions, they're going to come up in the cleared balance. And the goal is to get it to 0. If there's a difference, that means something's off. Something is either missing or something wasn't matched correctly. And then the equation down here is just saying you get this cleared balance by taking the beginning balance, subtracting any payments, and then adding the deposits. If you got any of this info wrong, like the date, you can always hit edit and change the balance date. Change the start. You can change the ending balance or change the ending date without leaving this page. You can always save it for later and come back. But what you're going to do, traditionally, reconciliation is literally just taking the homework and taking the answer key and matching to make sure they're correct. So here's your answer key. Your statement is like your answer key. And here we have one transaction. It's a $500 transfer on the 30th. So we have 2 transactions coming up here. It's a duplicate. So we're also missing a beginning balance to the account. And if you need help with anything you see here and don't want to do it yourself, I'd be more than happy to take you on as one of my clients. You can head on over to the Profit Logic homepage. There you could fill out a form, let me know a little bit about your business and what help you might need, and set up a time to talk with me, and I could tell you how I might be able to help you with your bookkeeping. Since we're kind of starting in the middle of this business's existence, So we'll include one of the accounts. We'll include one of the transfers. We'll include this one. But we're going to have to get rid of this other one. So we're going to edit it. And it's going to pull up the transfer form. We'll click on more and hit delete. And that's where we can actually delete the transaction. So we still have a $1,000 difference, and that's because there wasn't an opening balance for this account. So we're going to save for later. Or more realistically, keep the tab open and then just we're going to go into the chart of accounts. Just right click and open a new tab for the chart of accounts so you can get back to the reconciliation easily. If we go to Scrooge Duck Vault Savings and we click on View Register, we see there's just that one transaction. So when we added the account, we had the option to include an opening balance. And let's say you didn't, you forgot. What you're going to do instead is create a fictional deposit. And we're going to have the account, because remember, double entry accounting, there always has to be some other side of the transaction. We know it back in time, it could have been, let's say we know that the starting balance was an owner's contribution from the get-go. So we're going to include owner investment. Make sure we have the right account. It goes into the savings. All right, and hit save and close. And now in the register of this account, we can see from last year, there was a deposit made. Another possible account to use is opening balance equity. It's not a great thing to have on your balance sheet because it's very vague. It doesn't tell you where that balance came from. As a bookkeeper, we'll adjust opening balance equity and zero it out by taking or adding whatever the amount was to the owner's equity. With an LLC, that makes sense because it's just the sole proprietor. Gets a little trickier if you got partners, how to split up the equity. But if you absolutely don't know what I'm talking about, then just it's okay to put in opening balance equity. We know this equity already exists in the business. By the way, if you're ever wondering why the bank's coming up as zero for these accounts, it's because this is not automatically connected. So there's no bank reporting how much is currently in the account. When you link your accounts, you'll see what's physically in the bank versus what's been posted to the account. Ideally, you want them to match up, but sometimes if, for instance, money is being transferred and it's kind of in that limbo between the day the transfer was initiated and the day it's deposited, then that might be one reason why the bank versus posted is off. But if it's not just from a transfer, then it does mean there's probably some kind of mistake in QuickBooks in how something was recorded, or it wasn't matched, or wasn't mapped correctly. So if it's a really outrageous number and it never seems to change, and there's a huge difference, then you'll definitely want to do some digging. All right, let's go back to reconciliation. Oh, you know what? And we're going to update the reconciliation page. So now that we added that deposit, it's listed here from an earlier date. We're going to include that in the account. And now we know that the statement ending balance for what's actually in the bank matches exactly what's in QuickBooks. So we're going to hit finish now. And reconciliation is now done for that account. And once it's done, you can see a summary or a history by account. This will list all the reconciliation reports. You can see report for the reconciliation or attach a statement. And when you look at the report, you'll see a summary of the balances, what was cleared or not cleared, and details on about the transactions in the account. All right, let's reconcile our other accounts. So going back to the reconciliation page. Next, let's do the checking account. Okay, so we got a bigger statement. Again, we're checking the statement ending period, so it ends on the 30th, and we're looking at the ending balance. So we have an ending balance of $5,900. We have an ending balance of $5,997. Is that what I said? Yes. No. It's $5,977. And the statement ending date is the 30th of June. And then we're going to start reconciling. All right. So this one was pretty much auto-reconciled. QuickBooks was able to match the transactions because we uploaded the statement. They're all there. The beginning balance matches the cleared balance. We created an opening balance for the account when we set up the account. Some other things I want to point out in the reconciliation page is that if you can click on these transactions here and edit them, there's this little icon here as well, and it just means that this transaction came through the bank feed. So when we're in this feed and we're posting transactions, this little icon means it came from that activity, versus like adding a transaction this way, such as a bank deposit or as a journal entry or manually added. So this account is reconciled. And as we saw earlier, you can edit transactions right here on the page. It'll just take you to the form that relates to the transaction, like the sales receipt. So you can make changes there and still kind of be connected to the reconciliation page. But since everything looks good, we're going to finish. And then we got one more account, which is a Chase Bank. And the ending balance for this one is $597 with a statement period ending on June 30th. And again, we have a problem in differences because there was a beginning balance owed already. We know that all these transactions match up, so it's not going to be a transaction issue. It was a beginning balance issue. So another way you can get to the bank register is just use the bank register button down here that I always forget about. All right, we're going to have to add a manual transaction. And this one's going to be, for this one, I'm going to make a journal entry. This is where knowing debits and credits comes in really handy. We're going to do it just an opening balance from the last year. I'll show you later what this looks like on the balance sheet. So we're going to debit opening balance equity, which really is just owner equity. We'll debit owner equity. So we're going to debit owner equity, which in this case, we'll call it a draw because we credited, increase the liability account, this credit cards account. So because there's a credit on one side, remember, we got to have a debit on the other side to make a balance of the debits and credits. And equity accounts go down with a debit. So this is going to be an owner's draw. We're going to save and close this. We'll leave a little description so you know what it is. Okay, now when we go back to reconciliation, let's refresh the page. And now we can see there's that journal entry in connected to the account, because the account was part of the transaction. And we can see it does not have that icon. This means that it came from the bank feeds. So this was manually added, and now we're going to include it as being a part of that. It happened. It's a transaction that existed, and now our balance is at 0. So we're going to finish up the reconciliation. Now, there's so many ways you can make mistakes in bookkeeping, and reconciliation is one way to kind of weed out any possible mistakes. It's not going to tell you everything that might be wrong with your bookkeeping, but it's a really important process for just making sure you're as accurate as possible. You can also perform reconciliation for your loans. I'm not going to go into that today, but this is basically double checking that you've split payment to the loan and interest of the loan accordingly. You can also reconcile for things like payroll or any other asset you have. But we're going to go ahead and move on to our next topic. All right, so we got 2 topics left. The next one is talking about projects. This is a feature you don't have to use in QuickBooks as a consultant, but you might find really handy if you're doing a lot of consulting that involves both receiving income for the consulting, but also having to incur a lot of expenses in order to complete the consulting project. So this marketing agency consults with their clients, but they're also running ads for them too. Maybe that's part of the package. And the agreement is that the client will pay those ad fees, which are variable. They could change from month to month. So we're going to have to make sure those expenses are tracked in the project. Maybe another aspect of this firm is that they bring in other consultants or contractors to perform the work. So with projects, it may look like, oh, I made a sale. I earned $14,000 from this client. But really, after all the expenses that are unique to that client, it may be a lot less compared to other clients. So sometimes tracking consulting projects, you get a feel for what clients maybe provide the most profit, and you can make decisions in your business based off of that kind of information. So with QuickBooks Online Plus, you can access projects by going into the All Apps section and clicking on projects. So we're going to begin by creating a project. Let's start with providing some project details. Let's say it was our client. Let's say it was our client Chip Formula, who really loves us. He's gotten everything. He's gotten a couple consulting packages. He got the book. He got the course. He got the consulting package. And now we want to get into the nitty gritty of this done for you consulting work. And so we're going to create a project. You can create whatever kind of naming template you want to use. We'll just call it Chip June consulting package number 2. And we're going to include a client. There has to be a client as a part of the project, as all the fees and expenses are going to track back to them. So we're going to include Chip. We're going to say the start date was the beginning of June, and we'll say the end date is June. Or, you know what, we could change it since this is a monthly package, we can see over the long run, he could be working with us for a couple months, a couple years. Let's see over the long run how much we're making and spending on Chip. So we're going to have no end date for now. Or maybe, so let's say maybe he wants to do this for 3 months and see how it goes. Let's say goes through the end of September. And since the project's been started, we'll say it's in progress. We can add other notes or an address, but for now we'll just save. Okay, so here we have Chip's project page. You can see on the main project page, we now have Chip listed. And there's a nice little bar that's going to show us the at a glance income versus costs. But when we click on it, we can start tracking things like the progress, although this is a manual tracking method. If that's something you want to keep updated in QuickBooks. You could pin the project if you have a lot of them, if this is requiring a lot of your attention. You can make edits to this information we included when setting it up. But a really important button here is going to be what we add to the project. So if it's a really big project, you might start out with an estimate. And that estimate later can be turned into an invoice or receiving payments or progress payments. But down here on the dashboard of the projects of this project, we can see info based on hourly costs, on payroll expenses. So this is great for figuring out how much work each client takes, how much additional expenses. So we can add things like hours, manual entries of dates, especially if we use someone like Greg Brady. I think we said to work on this, we include hours. Here we can include expenses or bills, and incomes we send out to the product, to the client. So this is going to. So you don't always have to be in the project page to create things that pertain to the project. You can instead just go as you would to create an invoice normally. And when you go to add a client, you can go and select their project. It's going to be a subset of the client. So we want to track, let's say there's some additional work. If we wanted to add additional work that we're charging, or remember if there's a billable expense we have to pass on, we'll want to make sure we're clicking the project of the client. So we're going to leave that. So these add to project, they're for new items. So for a new bill, a new invoice. If we wanted to include transactions that are already coming through the bank feed. So for instance, if we go back in the bank feed, and remember we had contract labor from we can click on the expense form connected to it and make some adjustment and make an adjustment down here to relate it to a client or project. So again, you'll want to click not on the client, but on the package subset of the client. So that's going to be Chip. Then we're going to save and close. So that's going to update the transaction. Now if we go back to projects, we can see there was a cost incurred. So we'll have to update the project to include all former transactions that were related. For instance, we have this invoice for the ads. We might want to include an income category for project reimbursements. Add reimburse. Let's say client add reimbursements. We are not worried about spelling right now. Have to update that. All right, make sure that, again, under this invoice, it's connected to the client. We're going to save and close it. Ugh. And it reset everything. Okay, it was client add reimbursements for $300. All right, and we'll save and close. Okay, so now that invoice is connected to the project, and it was the $1,400 payment that we'll want to edit as well and change the client to the consulting project package. And we'll record and close. Okay, so we added the contract labor, we added the invoices. I think the one thing outstanding is that Google ad fee. So you can always go to all your expenses under the expenses and bills list if you just want it in one place and not have to dig through the accounts and the posted tab. So let's find ad fees for clients. We're going to edit this transaction and change the client project to the consulting project. And we'll save the transaction. And now when we go back to the projects and we update the page, we can see a really big difference between the income and costs. And here we can see the at a glance profit margin of this client project. And when we click on it, we can now see a list of all the transactions that are related to the project. If there's time activity, we can do that, track that as well. You can create reports based on the project, such as like a total income statement for the project. So you'll see the total for income. This is where you'll want to break it down more beyond just what the services were for in your chart of accounts. You can see the cost of goods sold. So we have the ad fees. So you'll see the gross profit there for $1,400. And then we threw in some expense labor for $700. So now the net income is $700 for this project. You can pull some other reports like time cost by employee or vendor, or unbilled time and expenses. So here's all the expenses that aren't related to time. So again, really what we're doing with project tracking, with bookkeeping in general, is just keeping our financial information organized in a way that gives us knowledge about the business and performance in order to make decisions about it. So again, we can find more information on details, include attachments about the project if you want to use this project page as the hub of information pertaining to it. But all in all, that's a really quick and good overview of what projects looks like in QuickBooks. So if you pay for the extra like $60 to $80 or whatever it is now to have Online Plus subscription instead of the starter subscription in QuickBooks, you get this additional feature that can be really useful, but really it does come down to how willing you are to use this consistently, to keep it up to date, and to use the tools within QuickBooks like QuickBooks invoicing and billing and matching the transactions in the bank feed to receive payment and flow money in and out of your business. I think it's pretty neat as long as you have the patience and willingness to work with QuickBooks. I know there's other ways you could track projects like with a spreadsheet or other software. So if that's not for you, if this doesn't look like it's robust enough, or you don't really like QuickBooks that much and don't want to be in QuickBooks, then going for another option works too. However, I hope this little overview can show you that it really is a simple tool. Sometimes it pays to make your financial tracking more simple than more detailed, because you're more likely to use it correctly and not create more overwhelm. So before we could go into reports, there's one other thing we need to do to adjust our account, our books at the end of the month. Remember we talked about earlier that in our bank, as a consultant who uses Square to receive payments, we might receive deposits of income from, for instance, or using Stripe, excuse me. We might receive income from Stripe, the deposit, but the actual sale of the item was different. They just pulled out the fee automatically and then deposited the money in the account. So sometimes, depending on how you integrate software, so if you integrate software, for example, you got Stripe here, this is probably the right way to go. You can connect it to QuickBooks so that so the fees get mapped to QuickBooks too. But for now, if that's not how yours is connected and you're just pulling from the bank feed, you're going to need to reconcile that Stripe statement at the end of the month. So I made a fictional Stripe statement. Okay, so when you pull up your Stripe statements, it's going to look something like this, like where you have a list of your items sold, you'll have the total of the income received, a list of a fee per item, and then maybe your total payout, and you'll get a total for that period of time. Usually it's a month. So we have to reflect these fees in our books. We have to have the income in the books look correct too. Oops. So in QuickBooks, one way to do this is a journal entry. If you know how to do your debits and credits well. So in QuickBooks, like if we look at the profit and loss statement for the last month, we have this sales of product income. And even though we had 5 books and 3 courses. Let me add those other 3 courses. So now for our total, it'll look something like this. And on our sales report here, we see a total of income of $2,177. That's not accurate, because we know the actual amounts that were sold total out to this. It was the difference of the fee where we get the $2,177. So we have to have our books be accurate. And that means we need to adjust the books to reflect this fee. Your taxes are going to be the same, even if you don't report this additional fee in the books. but we're going for accuracy. So one way to do this is to create a journal entry at the end of the month. So we'll say it's the 30th. And we're going to say just for Stripe fees as the description for all these transactions. So we got to add a debit and a credit to this transaction. So if you remember with expense accounts, those are debit balance accounts. So to increase them, to give them a balance, we have to add our merchant fees, a debit of $23 for the fees. And we're going to include a new account for Stripe fees specifically. The account type is going to be a form of expense, and we'll put it under bank charges. Oof. All right, so we added the Stripe fee, which is increasing with a debit of $23. Now we have to credit something else in order to balance this transaction. So so we have to include the fees to our payout to get the total of real income. So we have to credit an income account. And if you remember revenue income accounts, those are a credit balance. They increase with a credit. So we're going to have to credit the income account by $23 to bring it up to reflect the true financial nature. So just double checking, there's a balanced debit, a balanced credit, the accounts are correct, the date is correct. Now we're going to save and close this. So now we can go and check out financial reports. All right, now in the theme of financial knowledge, let's go into our last section of this course, and that's covering reports. So now that we've done all the bookkeeping, all of our transactions are added in the bank feed, we've reconciled our accounts, it's the end of the month, we're going into a new month. It is so beneficial. Like, the whole point of doing all this, apart from tracking for taxes and tax reasons, is to get information about our business. So we want to know things like, how much is the business worth? How much money did we make? How much did we spend in this certain period, whether it's a month, a quarter, or the year? We want to know things like how many invoices are outstanding, or how many bills are outstanding. So the best way to get this information in QuickBooks is by running different reports. So there are a couple financial reports that you should be looking at regularly, or at least know about. And the first one is the balance sheet. The other one is profit and loss statement, otherwise known as income statement. We'll talk about statement of cash flows as well, and we'll talk about aging, accounts payable, and accounts receivable aging summaries. But as you can see, there are a ton of other reports available for you to use to find out information about your books, your accounting, and your business. So going back up, let's go into the balance sheet. Now, always pay attention to the time period you're using. For a balance sheet, it's like a snapshot of a moment in your business to look at its net worth. Like, if you take all the assets the business has and you subtract all the liabilities, you see what's left over. That is going to be what the business is worth. If it was going to be sold like this particular day, what would be a good number that would give you an idea? The business as an asset, not necessarily as a income producing vehicle. I think the profit and loss statement will say a lot more to that, but the balance sheet is important to look at least annually, if not more regularly, if you're thinking about, if not more regularly. So year to date works for a balance sheet. All dates is going to give you a grand total of the whole lifetime. And that's usually the one I go to with a balance sheet. So on a balance sheet, you're going to see the list of your assets, your list of liabilities, and a list of your equity accounts. And remember, these were all pulled from the chart of accounts. These are their account balances. And they're listed from more liquid to less liquid, and more short-term to more long-term. So here we have we don't have a ton of assets in this business, just the money that's in the bank. And the accounts receivable, which is another fancy way of saying money owed to the business. Remember, we have that outstanding invoice that the client hasn't paid yet. The business technically earned it. They just haven't seen the cash yet. And it's still an asset because it can become cash. And once it's paid, it's going to end up being cash in the bank. On a balance sheet, you're also going to see your liabilities. So it's going to be like your credit cards. If you have bank loans, those will be down there too. And then lastly, your equity. This one is always confusing for business owners, but it's just kind of like a fancy way of saying capital, or like this, when you take all your assets and you subtract all your liabilities, this is what's left over that belongs to the owner or owners. And with LLCs or sole proprietors, when you take money out of the business, that reduces the worth of the business. So there were some owner draws that subtract from the opening balance that we created when we set up the savings account. With Bookkeeper, don't worry about this if you're just doing your books yourself. But if a bookkeeper would normally create a journal entry to move this out of this equity account and into owner equity. Your retained earnings will be calculated automatically from the prior year. So at the end of the year, once your books are done, all the income minus expenses, whatever is left over, that will become the retained earnings in the next year. So this will show you total equity, and the total for liabilities and equity should equal assets. They should be the same thing. It's that accounting equation we talked about earlier. So that's the balance sheet. Okay, our next statement is a profit and loss statement, also known as the income statement. This is going to be all of your income subtracted, all of the cost of goods sold, the expenses for the time period, and then what's left over is known as the bottom line, or the final net income. So something important about profit and loss statements is you have to be very meticulous about selecting the right period you want information about. Since the income changes throughout time, it's important to know what you're looking for. Do you need a quarterly report? Do you need a monthly statement? Do you need the annual so that you can do your taxes? Right now, we just want to do the last month. We did the reconciliation for the month. We adjusted our transactions to include the Stripe fees. We have all the transactions accounted for the prior month. We want to get an idea of like what actually happened. So here we see the total of income and expenses from the prior month. We can see our sales of product income versus service income. These are all the income and expense accounts from the chart of accounts. And we can see the ad fee that was attributed to that one project. So we can see there's a gross profit, which is income minus cost of goods sold, for $5,200. And something I forgot to mention on the balance sheet, you can click on these numbers to go into more detail for that line item. So here's all the sales of product income and all the individual transactions that make up the sales. So you can see things like the clients involved, a description, and you can edit the information you see on here as well by hitting the customize button. You could do things like, so this is for any of the reports sections in QuickBooks. You could do things like, you could round things up. You can show negative numbers in red, change how they show, whether you want parentheses to show negative numbers. Just be certain that you got to do this for most individual reports. So if we go back to the profit and loss statement, we saw our income, cost of goods sold, and then the expenses, general business expenses for the time period. And then on the bottom here, you'll see the net operating income and our net income. So this is what you actually made for that time period. It looks a lot different from just checking a bank account and seeing that there's $5,900 sitting in the checking account. This is your actual profit and performance, if you will. So that's the profit and loss statement. I highly recommend cleaning up your books every month, reconciling them so that you can look at this statement on a monthly basis. All right, so we looked at balance sheet, profit and loss statement. Another one that's less used but could be interesting is statement of cash flows. This is going to give you a report of how money moved. So we saw that there was this income. We have an outstanding accounts receivable. There were changes to the credit card. So this is just movement of like mostly expenses or income. Financing activities is going to show you the movement of money across accounts. So whether there were owner's draws, investments, changes in equity. This gives you an idea of how cash is moving. And lastly, if you're invoicing out of QuickBooks a lot, a really important report is going to be your accounts receivable report. This is going to show you a list of all the invoices that are outstanding, and it'll show you the number that are past due within 30 days or 60 days or 90 days or over 90 days. So that's one way to stay on top of invoices as a report. Another is to just go in and check the invoice bar in QuickBooks. And the other end of that, accounts payable, that's the money you owe to vendors, which we don't have any transactions that reflect that. You'd find that in the accounts payable report here, and it looks very similar to the accounts receivable. Two more things I'm going to show you here. One is the audit log. Not everyone knows about this. Audit log lets you see everything that was changed in QuickBooks and which user made that adjustment. It kind of helps with communication, seeing what happened, if someone made a mistake. You can go back and see exactly how did you get to the books you have currently. Here's all these user involved adjustments. Or like if you have something mapped to QuickBooks, like an integration, and those happen automatically, you'll see that audit log in here too, and you could break it up by users and whatnot. One other report I'm going to show you before we tie up here is at the bottom under For My Accountant. If you ever just want to see a list of all of your transactions, that would be your general ledger. So again, you'll do this for a time period. Maybe it's all the dates. You can see a list of all the transactions related to the different accounts. So here are the physical accounts. And then you got your liability accounts and equity and income and expenses. If you need to just see a running list, you can do that. And then if you want to dive into individual transactions, you just always click on the number and you can open it in a new tab or just stay in the window. That's one way to just get the full list. Sometimes there's so many pages in QuickBooks, you kind of forget what's actually going on. and lose track of what's going on. So this is one way to just see everything that's posted in your books, and that's the general ledger. All right, wow. So if you're still with me, thank you so much for taking your time out of your day to listen to me do my best at teaching and maybe ramble a little bit. I am very passionate about bookkeeping, about making software more user friendly. QuickBooks can do a lot of things, but it gets a lot of bad press for just constantly making changes that people might not have asked for, becoming more and more expensive, and can be really, really overwhelming. So it's part of my goal to make bookkeeping accessible to all business owners, whether you have to do it yourself or you eventually get help as you grow as a business. So I'm really happy I get to be a part of your journey. It really is an honor. And if you need help with anything you see here and don't want to do it yourself, I'd be more than happy to take you on as one of my clients. You can head on over to the Profit Logic homepage. There you could fill out a form, let me know a little bit about your business and what help you might need, and set up a time to talk with me, and I could tell you how I might be able to help you with your bookkeeping. You found this, so if you found this course useful, please give it a thumbs up. Let me know in the comments if there's anything else I can explain, any other videos I should make, tutorials, courses. I'd be happy to receive your feedback. So good luck. You're going to do great as a consultant. And hopefully you're going to get the most out of this software to know how well your business is going and what kind of value you're giving to the world. So I wish you all the best of luck, and I'll see you all in the next video.